Good morning and welcome to the Greater Bakersfield Chamber of Commerce, Kern County Hispanic Chamber of Commerce, Central California chapter of the Association of Builders and Contractors, and the Kern County Builders Exchange program COVID-19 CARES Act, Economic Stimulus Package and Support for Workers. Today's program is being presented by Klein, DeNatale Goldner's J. Rosenlieb, Chair of the Labor and Employment Practice Group, Jacob Eaton, Bankruptcy Partner, Donna Thrasher, Senior Human Resources Consultant, and Brown Armstrong Partner Ryan Nielsen. This program is based on information current as of March 31st, 2020. Given the developing nature of response to COVID-19, employers and business owners must consult the most recent information from government sources and their legal counsel. Attendees to today's program may submit questions by using the Q&A button located at the bottom of their screens. We will now begin today's program.
Good morning. This is Jay Rosenlieb of the Klein DeNatale law firm. I am joined this morning by Ryan Nielsen with the Brown Armstrong law firm, Jacob Eaton with the, Ryan Nielsen with the Brown Armstrong accounting firm, Jacob Eaton with the Klein DeNatale law firm, and Donna Thrasher with the Klein DeNatale law firm. We're welcome to have you here this morning for these important items. We will get underway here in just a moment. We are first going to address this morning a few items from HR 6201, implementation of the Families First Coronavirus Recovery Act, wage replacement options. Then we're going to be talking the bulk of our time this morning about the CARES Act, HR 748, which is the economic stimulus package for workers. So let's get right into the Wage Replacement Act. And Donna, can you help us out with some of the general aspects of HR 6201?
Yes, let's start with the federal wage replacement options. First of all, we have the emergency paid sick leave option, and that provides 2 weeks of pay for employees on leave due to coronavirus issues. And that's 2 weeks with a maximum of 80 hours based on your work schedule, but no more than 80 hours of leave. And these apply, and we've also got the emergency family medical leave, which provides up to 12 weeks of leave. And we will get into the details on each of these, but they apply to companies with less than 500 employees, with some exceptions for those very small with less than 50 employees. So as we talk about the emergency paid sick leave and the latest guidance on that, very important, if a business closed prior to April 1st, the employees are not eligible for the emergency paid sick leave or the emergency paid family leave. They may be eligible for unemployment, but not either of the emergency leaves if the business has already closed. If the business closes on or after April 1st, the effective dates of these leaves, but before an individual employee actually goes on leave, those employees are not eligible for the emergency sick leave or the emergency family leave. If a business closes after April 1st and an employee is on leave, the business is only responsible for paying for that leave until the date the business closes, and then the employee's paid leave ends, and they could go to unemployment. And similarly, if a business is open, but not all employees have the opportunity to work, so some are furloughed, some have reduced work hours, those employees are also not eligible for the emergency sick leave or the emergency family leave. Those employees can get unemployment for the partial absence or full absence from employment.
So a little more guidance on the emergency family medical leave, and this is guidance that was issued as of March 28, just last Saturday. Intermittent EFML, emergency family medical leave, may be taken if the employee and employer agree in any agreed to increment. So EFML may be taken intermittently. Secondly, the employee must submit documentation that their child's school or daycare is closed for the employer to claim the tax credit that's available for employees who are taking emergency family medical leave. This can be, for example, a notice posted on the school's website or an email from the child's child care, or even a news article with closures. It is important to note that emergency family medical leave is, and this is something that surprised both Donna and I, is not in addition to the regular family medical leave. So, for example, FMLA leave taken in the prior 12 months can be deducted from available FMLA. It appears that we have a question.
Yes, one of the attendees has asked, if exempt staff employees had large pay reductions across the board in California due to COVID-19 issues, are there any benefits to help them?
Yes, it depends on what the extent of the reductions are, and Donna can chime in here, but my first thoughts are that unemployment insurance might be available to them depending on the amount of the reduction. Also, given the fact that EFML may be taken intermittently, they may get paid days for that, just as they would in regular FMLA. Donna, any further thoughts?
My thought is only that happens if there's a schedule reduction. So if they're still working full-time, but now they're making, $100,000 instead of $150,000, I'm not sure that there are any benefits available if they're still working full-time.
Employers do not need any new FMLA forms due to EFMLA. And there is a poster that must be posted. That poster is actually one of the last slides in today's program. It also can be obtained by going to the DOL website. The guidance does indicate that the poster must be emailed to those employees who are telecommuting. Molly, it appears that we have a couple questions that have been brought up.
Yes, so one attendee has asked, if an employee has a stay-at-home spouse and the children are home from school, is the employee eligible for EFML?
They would only be eligible for EFML if it prevents them from working. So, for example, if their normal child care arrangement is their spouse and they normally work because their spouse takes care of their children, then I'm not sure that their child care situation has changed such that they should need to stay home and take care of their children. If they have other conditions that would say because of the COVID virus, they should not be exposed to other workers and they could telecommute, for example, but don't want to be out of the house and bringing viruses into their children, that might be a consideration, but I'm not sure that they're eligible for leave if their child care situation has not changed.
Correct. And let's see, Molly, it looks like we have a question from Brian.
Yes, Brian has asked, what qualifies employers to be exempt if they are less than 50 employees?
That's a good question. The Department of Labor had indicated that they would issue guidance on that in April. They actually surprised us and issued us guidance on Saturday. It is in the Department of Labor guidance for small business, and there are several factors that are listed there. In order to accommodate our program, I'm simply going to direct our listeners to the Department of Labor guidance for small business exception. It's actually called DOL Small Business Exception Guidance, questions number 58 and 59.
Okay, as we provide more detail also on emergency paid sick leave with the latest DOL guidance from March 28th. The good news is for the sick leave, you are eligible regardless how much of FMLA you may have already taken. So that's different than the emergency paid family leave. If the employee takes the 2 weeks of emergency paid sick leave concurrent with the first 2 weeks of emergency paid family leave, the 2 weeks of emergency paid sick leave count as the first 2 weeks of the total 12 weeks of leave. So it's a total of 12 with the sick leave and the family leave. It's not 12 plus 2 more with the sick leave.
And it appears that Aaron has asked a question, how can you determine if an employee truly needs FMLA? And I think our next bullet points respond to that. Donna?
The employee must provide documentation supporting the need for sick leave. So I'm not sure that's to your question on FMLA, but on the sick leave side, again, documentation is needed, and this is needed so that the employer can get the tax credits. So something as simple as the government quarantine order will suffice. Also, written documentation from a healthcare provider advising the individual to self-quarantine is very helpful. And the Centers for Disease Control have said, don't overburden our healthcare providers asking for several notes about why your employee is absent.
Molly, we have a question from Adrian.
Yes, Adrian has asked, if your business has over 500 employees, are you required to post the notice?
No, this only applies to employers with under 500 employees. If you have more than 500 employees, this information doesn't apply.
So let's move on. We've talked about the federal wage replacement programs, emergency family medical leave, and the emergency family medical leave, emergency paid sick leave. There are and have existed prior to COVID-19 California wage replacement benefits. These are claimed through the Employment Development Department, and you all know about what these programs are. Of course, they're the unemployment benefits. There are expanded weeks of wage replacement and new maximums and minimums. Donna, do you have that information?
Yes, so there are an additional 13 weeks of unemployment benefits provided. So that's a total of 39 weeks in California. We had 26 plus the 13 additional.
And the maximum is moved up to 1,050 now, is that correct?
That is correct. So what they're saying is your normal state unemployment calculation plus $600. So for many individuals, it may be very close to full payment while they're on unemployment. And it's unemployment related to COVID issues that gets the additional payment, not just someone that's been on unemployment for the last 6 months sort of thing.
State disability insurance is another wage replacement program that provides for 6 weeks of income replacement up to a maximum of $1,300 per week. That must be based on the employee's own illness and must be supported by documentation from the healthcare provider. That extends from 6 weeks to 8 weeks beginning July 1 of this year. So in addition to unemployment insurance benefits, state disability insurance, there is also paid family leave here in California. That's 6 weeks of income replacement, a maximum of $1,300 per week. Again, that is based on the illness of a parent, child, or spouse, and must be supported by documentation from a healthcare provider. Molly, we have a question from Tanya.
Yes, Tanya has asked, I just want to confirm that the statewide stay-at-home order does not meet qualifying reason 1. An employee would need an individual quarantine order, correct?
That is correct. Our reading of the governor's order of Thursday night of last week is that it is a stay-at-home order. It is not a quarantine or an isolation order. Quarantine and isolation orders, according to the Centers for Disease Control as well as the World Health Organization, are based on having the disease, having contact with someone with the disease, or being ordered into quarantine by a public health official as a result of coming from a country where there's an exposure order. So let's see, our next slide, continuing on with California wage replacement options, there is California workers' compensation. We have not seen this wave of cases come through, but we can expect them. That's a workplace injury or workplace acquired illness, and in the context of COVID-19, the claim would be that the employee caught COVID-19 in the workplace. Follow the usual routines that you follow in that regard. And then finally, California mandatory paid sick leave, 3 days or 24 hours, covers all employers with 21 or more employees. With 1 or more employees. And alrighty, miscellaneous issues, furloughs. A lot of clients and a lot of businesses are talking about furloughs. A furlough that extends beyond the current pay period is considered to be a termination, and accrued vacation and final pay will be due if the furlough extends beyond the current pay period. There is a possible exception to that where an employee chooses to defer vacation payments for additional consideration, but you'll need legal advice for that. Donna, talk about reduced schedules.
Yeah, so for some individuals, they may get to continue to work, but there's not enough work to keep everybody busy, so the employer decides to say, let's cut everybody's schedule in half and everybody still gets to do some work. In that situation, the individuals can apply for unemployment to make up the other half of their pay. And hopefully with the enhancements to unemployment, that does make up most of the rest of your pay. There's another alternative that you reduce schedules just slightly. And if you slightly reduce those schedules, there's what's called a work sharing program. Both of these are unemployment-related programs through the Employment Development Department. The work sharing program is something that an employer needs to initiate by completing a form so employees are eligible for the work sharing program and they get unemployment benefits for the schedule reduction.
Molly, we had a question come in at 10:15 from an attendee.
Yes, someone has asked, are there any benefits for sole proprietors with no employees that are looking for income replacement for themselves due to an industry that has had clients cancel services, i.e. photographers?
The Department of Labor most recent guidance says that the unemployment will be expanded to additional individuals that are not normally eligible, such as sole proprietors and contractors that usually were not eligible for unemployment. So again, I'd look at that Department of Labor guidance that came out on March 28th, and it says that there will be expansion of those unemployment benefits for those individuals not normally covered.
Let's go to our next slide, which is entitled Major Disaster Leave Sharing Programs. I'm going to touch on this slide only but briefly, given the time that we have, and refer you to IRS Notice 2006-59. This is not something that is new. It has existed for the last 14 years, but it is a program that allows employees to transfer leave between themselves, and it does address the tax impacts of doing so. So it may be something that you want to take a look at. Our next slide is state help for employers. There are rapid response services from the Employment Development Department. Google that. There is also a payroll tax extension of up to 60 days. You must request that. It's not a holiday. It's something that you need to request. Telecommuting employees, it is suggested that you create a telecommuting policy for COVID-19 and ensure that you are reimbursing employees for their company use of their personal computers and phones and internet. Utilize resources such as web conferencing to help your employees do their job. And when reviewing performance, consider the limitations of telecommuting. All righty, we'd like to move on now to the CARES Act, formerly known as H.R. 748. The CARES Act is a $2.2 trillion stimulus package, represents about 10% of the nation's output. The objective of the CARES Act is to limit the economic impact of COVID-19 outbreak, and the tools that are available are to aid companies through payroll protection and disaster relief loans. Let's now bring in Ryan Nielsen and Jacob Eaton to address the CARES Act.
All right, thanks, Jay. As you mentioned, the Act is primarily designed two separate lending programs, one that has already existed, that's the Economic Injury Disaster Loan Program. The newest one that was included specifically in the legislation passed late Friday was the Paycheck Protection Program. Both of them are intended to help small and medium-sized businesses get relief, although they can't be used for the same purpose at the same time. So, as I mentioned, the EIDL program has already been in existence. We've had a number of clients already begin the application process for that all the way back to early February. So we'll focus our attention more on the Paycheck Protection Program since the provisions of this program are relatively new, and then I'll touch on some of the key changes to the EIDL program a little bit later. So the primary goal of the Paycheck Protection Program is to keep people paid while they're away from work, give employers an incentive to keep their workers on the payroll. And what it does is provides, so long as you keep your employees on the payroll for at least 8 weeks, then the loan or portions of the loan will be forgiven. Again, it applies to businesses only with 500 and fewer employees, and there are some affiliation rules that come into play here, meaning if you're a chain restaurant or hotel, then there's an opportunity to take the total number of employees per location as opposed to a national chain as a whole when you're counting those 500 or fewer employees. A couple of the just broad provisions: companies have to be in operation before February 15th of 2020. The loan amounts are going to be limited to the lesser of $10 million or 2.5 times the average monthly payroll. So if you have, say $100,000 a month in your average monthly payroll, your loan limit would be $250,000, if that makes sense. Included in the calculation of that average wages would be salaries and tips, retirement benefits paid, severance payments, state and local taxes on the employee compensation, but it doesn't include anybody that makes over $100,000 a year. So if you're counting your total employees, those that make over $100,000 a year, you would exclude the amounts above and beyond the $100,000.
This is Jacob, just want to throw in that a $250,000 loan, I mean, that's not going to save the business. It's going to help. If you've got $100,000 worth of per month of payroll, I mean, that's a substantial business, and a $250,000 loan isn't gonna save you, but it'll help.
Now that's a fantastic point, because this program isn't intended to save the business long term. It's not going to be able to be used to purchase inventory or replenish your inventory. It's strictly to keep your employees on the payroll for the next 8 weeks. I wouldn't say strictly, but that's the primary purpose of it.
Right.
If you want the forgiveness portion of it.
Right.
Now, if you want to, if you are still forced to lay those persons off and are not able to rehire them, then whatever you receive can be turned into a loan to be repaid over a 10-year period of time at up to 4% interest. Go ahead.
Molly, we have a question from Justin at 10:25 this morning. I think it's an interesting question for Ryan and Jacob to consider.
Yes, Justin has asked, since it does not include compensation for a person making over $100,000 a year, can you reduce that person's salary so that they qualify?
The first $100,000 qualifies. Just the amount above and beyond $100,000 does not qualify.
So no need to reduce compensation. It's just you're not going to get compensated for an amount over that.
Right. So if you had 10 employees that made $100,000 a year, say $120,000 a year each, then you would exclude the $200,000 related to the excess compensation, and you'd get that'd be $1 million times 2.5. You'd get a $2.5 million loan.
The other thing is that if you reduce compensation by more than 25%, that will reduce the amount of loan forgiveness that's available to you. So by reducing compensation, you might not be taking advantage of the full forgiveness that may be available otherwise.
Real quick question here from Joe. Is the payroll protection program available for 501c3 religious nonprofits?
Yes.
Good news, Joe. All right, our next slide on the loan terms for the Paycheck Protection Program.
Okay, so under existing SBA loan programs, typically there is a collateral requirement. If you have real estate, then they'll take that. They require personal guarantees and a lot of other provisions. Under this PPP program, there's not a collateral requirement. It can't be used if you're using some other form of employee retention tax credit. So under the prior stimulus package passed last week, there was some additional tax credits. You can't use them both at the same time. But they've said the maximum interest rate will be 4% and can be repaid over a 10-year period of time. This is for the portion that would not be eligible for forgiveness, to be treated as a grant, if you will. However, there won't be interest or principal payments for the first 6 months, and could be a year depending on circumstances, and there's no prepayment penalties. A few other items, they're also not going to charge you up front for origination fees or any of those types of items, and we'll talk a little bit about that later on as well.
Overall, great terms.
Yeah.
Molly, we have a question from Anonymous at 10:25 this morning.
Yes, an attendee has asked, what is the 1-year period used for the average calculation? Is it the 2019 calendar year?
It's the 12 months immediately preceding the loan.
And Molly, a question from Brian at 10:27.
Brian has asked, do company owners count as employees under this loan program?
That's a great question. Is the company owner also an employee of the entity? I think we need some slight guidance on that because in a corporation, certainly the ownership is typically also an employee of the corporation. They're separate legal entities. In a sole proprietorship, that's not typically the case. I don't see sole proprietors usually on the company payroll as well. So they have said that it's applicable to sole proprietorships, but they haven't given us yet any guidance as to how that wage calculation will be determined.
Stay tuned.
Stay tuned.
Right.
So applications, what's the application process look like?
All right, so unfortunately, this is another area that we have to stay tuned for. The guidance that they have provided is that the applications will be made through lending institutions that already are set up to make SBA loans. So most of our community banks here in town are authorized to make SBA loans. And so that would be the first place to look. The issue is that they haven't provided an application process or guidance to the local banks yet to be able to submit an application. Treasury Secretary Munchin said that he expects by Friday. Over the weekend, he said by the end of this week. And then Friday is what we're hearing. But until that information is actually in the local financial institutions, your banker's hands, we don't know exactly what that process is going to look like. But expect that it will be available through your local banks. I guess one caveat, I would, certainly reach out via email to your banker if you have a relationship. They're not likely answering the thousands of phone calls that are pouring in. But send them an email and let them know, if you've recently done a loan with them or in the last year or have an existing loan with your local financial institution, the likelihood that they already have your balance sheet and income statement, personal financial information, that sort of thing, will be greater. If they don't, just ask them what's typically required for a loan and start gathering that information now, because there will be some information required. We just don't know exactly what that's going to look like yet.
So Ryan and Jacob, here's a little brain teaser question. Molly, the question from John at 10:30 this morning.
So John has asked, am I correct in including any debt forgiven will be considered taxable income in the period in which it was forgiven?
Incorrect.
Yeah, that's incorrect. That's one of the I think really cool things about what they did here is that generally debt that's forgiven can be counted towards your income. But what they did here is they said that you can this debt can be forgiven under certain circumstances, and it will not be counted towards your income.
That's correct.
Ryan, anything else on the application process?
I think the guidance is that they've told us, again, the sole proprietors, independent contractors, Uber, Lyft, Instacart, drivers, self-employed are eligible to participate. What they haven't told us is how they'll go about calculating their previous 12-month average wages for determination of what that loan amount would be.
One other thing on the application process is you can apply through your banks, but the SBA is also making these loans directly. So you can go direct to the SBA on this also.
Yeah, they just don't have an application process for the PPP program yet on their website available. So hopefully that will be by this weekend or late Friday, but stay tuned for that. And I definitely would encourage you to continue to check the SBA website. They have been a little bit slow in updating it, and certainly with the economic injury loan process was a bit delayed last week. The website crashed almost immediately, so.
So what are some of the other key features of this Paycheck Protection Program?
All right, so we've already discussed kind of the portion that's not going to be forgiven if it's not used on items such as, your payroll costs and the costs related to providing health care benefits, paid sick and medical and family leave, salaries. It can be used for your mortgage interest or rent payments, and then utilities. So essentially, if you maintain your current level of employment or pre-crisis level of employment for a period of at least 8 weeks, then you can utilize those funds for the items I just mentioned, your payroll, rent, mortgage interest, utility payments, and those sort of items. And those amounts will be forgiven provided that you maintain your employment level. So you're going to get a loan for 2.5 times your monthly employment. You have to keep them employed for 2 months, essentially 8 weeks, almost 2 months, so that the remaining portion can be used for those other items, mortgage interest, rent, and utilities, that sort of thing.
It's important, I think, to be focused on how you use those funds so you can take advantage of the forgiveness.
Yeah.
You don't want to go out and pay something that, buy new inventory or something like that with this loan, because it's not going to be forgiven at that point.
So yeah, I think that's a great segue into the economic injury disaster loan, because as Jacob mentioned, keep those funds separate and utilize them only for those items I mentioned, at least for the first 2 months, and you'll be eligible. It essentially will be a grant. The EIDL loan, however, can be used for significantly broader scope of expenses, but it is not, it won't be forgiven. There is a $10,000 emergency grant that is not a portion of the loan that can be used. I would recommend all of you to apply for this if you intend to apply for one of these loans now. If you do, in fact, receive that $10,000 grant, then it will be essentially reduced from the Paycheck Protection Program loan that you may end up getting further on down the road. But the EIDL loan, as I mentioned previously, has been around for a long time and was designed for disaster relief. But the old provision said that you had to be in a declared disaster area. Well, they've now declared all 50 states eligible for this, so they've said, nationwide we're in a disaster area. Business had to be operating by January 31st of this year, so new businesses are not eligible for it. Again, they've expanded access to sole proprietorships and independent contractors, as well as tribal businesses, cooperatives, and employee stock ownership plans with fewer than 500 employees, and all nonprofits, including 501c6s, 19s, those are veteran organizations, religious organizations that previously were not eligible to receive these types of loans. So the terms of these loans, the maximum amount is $2 million, and the SBA will determine the limit on those loan amounts. They're not going to automatically hand out $2 million, but based on your ability to repay and credit factors, I think they'll determine the amount of your loan, is my understanding. For businesses, the interest rate will be 3.75% and 2.75% for nonprofit organizations, and there'll be up to 30-year repayment plan.
Molly, the question from John at 10:38 this morning, I think this might be a question for everybody.
I'm just navigating to that right now. We're very popular with the questions today. Okay, so John has asked, what process, if any, will be used to determine how or whether a company was impacted by the COVID-19 disaster?
We're all looking at each other here.
Well, I think a good example is if the business is failing already before any of the COVID-19 happened, don't expect this loan to save you.
Right.
You know, if you've got 10 employees and have had to let 8 of them go just in the last 4 weeks because of restrictions, stay-at-home orders, that sort of thing, certainly you're impacted. I don't know that there's a bright line that they say who has and hasn't been impacted, but you know, it's safe to say if your business decreased between, you know, if it was booming in January and fell off the map in March, pretty good chance it was due to COVID-19.
Jacob, any thoughts?
My thought is that you're probably going to have to answer that question and provide documentation on your loan application. So consider your individual circumstances and plead your case in your application to, you know, think about what happened to your business. Was it because of COVID-19, because of stay-at-home orders, because of, you know, a sick employee, and plead your case. But we really don't have specific guidance on that right now.
Yeah, stay tuned for guidance on that. And I just do want to note that there are, between production people, IT people, and your 4 speakers, we are all socially distanced at 6 feet in this room. So we're, all righty. Let's see, we've talked about the terms, right? What about...
One more comment on terms. I think it's worth mentioning that, as Ryan said earlier, that this is part of a standard loan package. So, well, standard. It's part of an existing disaster loan program where they're going to ask for collateral. They're going to ask for a personal guarantee, and that's distinguished from the prior program we discussed.
Correct. Expect that you'll have to provide a balance sheet at minimum, a statement of your liabilities, so all of your outstanding loans, lines of credit, lease obligations, anything else that would have, you know, potentially an issue with repayment because of this economic disaster. They're also going to ask for any business owners with more than a 20% ownership interest, personal financial statements from those shareholders or partners. So expect that there's a bit more information that is going to need to be gathered. Consult your individual CPAs and attorneys. I think that's a good point to note that in all of this, make sure you're working together with your attorneys, your CPAs, and your insurance brokers. There are some other, you know, you may have some insurance provisions that allow for, you know, business interruption, insurance funds and that sort of thing. So make sure you're working with all of your professionals that you would normally consult with throughout the year, and ensure each other's on the same page with what your goals are, what your resources are, and what your limitations might be.
Ryan, tell us about the uses to which the EIDL loan can be used. And Molly, if you could queue up the question from Ron at 10:39. So Ryan, go ahead.
Sure. So where the paycheck program is can be used for other items other than payroll, if you're strictly using the loan portion of it, it won't be forgiven, but the EIDL loan essentially can be used for normal working capital to pay your outstanding fixed debts, your mortgages, your long-term lease obligations. AP and any other bill that you incur in the normal course of business. Simply, they just can't be overlapping. You can't use the EIDL loan to pay your payroll and then use, say, for the month of April, and also use the Paycheck Protection Program funds to also pay that same payroll. So keep them separately accounted for, so you understand that if you got the PPL loan, you can get the, as Jacob mentioned, you can get the forgiveness portion, and then use the EIDL loan for your other obligations to pay off your mortgages, your lines of credit, credit card, and normal working capital requirements, inventory, that sort of thing.
Ron, I'm sorry, Molly, the question from Ron at 1039.
So Ron has asked if he'll receive loan forgiveness if he uses the governmental loan to pay down his other loans.
So you can use the PPL program to effectively refinance the EIDL loan. It's my understanding of it.
Right.
So I guess the case you would do that is if you already received an EIDL loan and then were approved for the paycheck and use those funds for payroll, then use the PPL funds to essentially refinance the amount of the EIDL loan that was used for eligible expenses so that it can then be forgiven.
Right. I don't think you could go and pay down a credit card debt that was used not for these eligible expenses. If you, for example, it was a gas card and you paid off your gas card, purchasing fuel isn't one of these expenses that's eligible for forgiveness. So if you paid that off, it would not be forgiven.
So basic filing requirements, Ryan.
Right, so as far as the application process, I think we already talked a bit about the application, but you'll do that online through the SBA. As I mentioned the last week, it has crashed or been extremely slow in several occasions, but there is an opportunity to fill out the complete application, essentially in a PDF, print it, and then you can email the entire loan package online, or send it, overnight to them in a hard copy form. But one way or the other, you're going to have to complete the SBA loan application. You'll have to file what's called 4506T. That's an authorization for SBA to access your tax returns, previously filed tax returns. So you need a signature from whoever it was authorized to sign your federal income tax returns. They'll also request copies of your most recent income tax returns, even though they can access them through the IRS. Again, schedule of liabilities and a personal financial statement for any owner with more than 20% ownership in the business.
Molly, a question from Yvonne at 1044.
Yvonne has asked, does the paycheck program count as income for the company?
No, it does not.
All right, additional filing requirements.
All right, so expect that they're going to follow up with you. If you didn't provide them very detailed information, then they're likely going to ask for not just the standard, Form 1120 or 1120S tax returns that you filed, but the supporting schedules that go along with them. They may also ask for tax returns of the principal owners, those that are over 20% owners, or the managing partner, managing member of the entity, president, CEO. If you haven't filed your 2019 income tax return, then they'll look at 2018 returns, but they're also going to want a 2019 P&L and balance sheet for that year. And a current, I would expect that they may ask for a current year-to-date profit and loss statement as well. Just expect to have some follow-up questions. They've said that they've streamlined this process incredibly, but want to ensure that, you know, they may have some follow-up questions, start gathering your information now.
I think we're going to be moving on to the tax relief provisions, but I just wanted to jump in and mention that there are two changes to the bankruptcy code based on the CARES Act. And one is that there's a change to the bankruptcy code to allow for a more streamlined Chapter 11 process. That is a restructuring of debts. There's a small business provision that allows for the streamlined debts or for more streamlined restructuring. And previously, to be considered a small business, the cap was about $2.7 million. They've increased that cap to $7.5 million in debt, and that increase in debt limit will be available until March 27th of next year. So if all of the loans don't help you, maybe bankruptcy can.
So, small business provisions, business tax relief. Ryan, there's an employee retention credit.
Yeah, so again, if there's an immediate need, the loan process doesn't work out for you or ends up taking a significant amount of time, they've put some additional provisions to provide tax relief where they'll provide a refundable tax credit of 50% of the wages paid by the employers to the employees. So essentially, if you keep your employees employed, then you can apply for a credit of 50% that will essentially reduce your payroll taxes. So if you're paying Social Security, Medicare taxes on a quarterly basis to the federal government, you take all of the wages that you have paid to your employees, and you get that 50% immediately as a credit against those payroll taxes. And those are wages that are paid for essentially your workers that would be furloughed or laid off. Again, similar to the PPP program, but this doesn't require an application to the SBA. And it can be claimed quarterly, but it's limited to $10,000 per employee for all the quarters in aggregate. So the credit per employee, I guess, for the entire year through 12/31/20, you can apply it each quarter, but it's going to be limited to $10,000 per employee.
We have a question that's just a little bit outside the slot, but let's talk about it here. Are the stimulus checks taxable? Do they have to be repaid with the returns, and are they included in the income?
My understanding is that the stimulus checks are going to be treated as a tax credit on your 2020 tax filing. So no, they wouldn't be counted as income, and it's essentially an advance of advanced tax credit, is my understanding.
All right, employer eligibility for business tax relief.
All right, so it's available to employers with operations that have been fully or partially suspended as a result of a government order limiting, essentially all of California. I guess everybody is going to be eligible here because their operations have been likely fully or partially suspended. Wouldn't apply to hospitals because they have not been, but most employers will be eligible, and then it's also provided to employers that have experienced a greater than 50% reduction in quarterly receipts measured on a year-over-year basis. As far as wages go, though, employers with an average of 100 or fewer full-time employees in 2019, all of the wages are eligible for the credit, regardless of whether or not the employees have a reduced schedule or have been laid off. If you've got more than 100 full-time employees last year, then only the wages of furloughed, laid off, reduced schedule employees would be eligible. And then one other key provision in there, the term wages also includes the health benefits that are provided. And again, that goes into the $10,000 cap paid to each of the employees for the year. And it applies to wages paid after March 12th of 2020 and before January 1st of 2021.
Okay, temporary repeal of the income limit for net operating losses.
Right, so I don't want to spend a whole lot of time on this because NOLs are a fairly complex tax issue, but if you're aware that you have net operating losses or have had them all the way back to 2013, the Act allows for a 5-year carryback of NOLs that are arising or that arose in 2018, 19, or 20. Currently, there's the Tax Cuts and Jobs Act had suspended some of the provisions of NOL carrybacks, and the CARE Act now essentially reversed that suspension. It also reduced, there was an income limitation on utilizing net operating losses, and they repealed that limitation. So you can, net operating losses can be utilized to fully offset your taxable income.
Lori asked a question at 10:32, and in the interest of time, Lori, if you could give us a call offline on that. Interest expense deduction temporarily increased.
Yeah, so also under the Tax Cuts and Jobs Act that was passed back in 2017, there was significant limitations on interest allowed to be deductible, limited to 30% of your adjusted gross income. That limitation has been lifted as well.
All right, as we indicated, there is a required posting for emergency paid sick leave and the expanded family and medical leave, and that is what's on your screen now. And
as mentioned, for employers with under 500 employees.
All righty, thank you very much. And Molly?
The Greater Bakersfield Chamber of Commerce, the Kern County Hispanic Chamber of Commerce, the Central California Association of Builders and Contractors, and the Kern County Builders Exchange thank our presenters, Jay Rosenlieb, Jacob Eaton, and Donna Thrasher of Klein, DeNatale, Goldner, and Ryan Nielsen of Brown Armstrong. We thank you for your attendance. This concludes today's program.